Hi, guys. If your business is buying fixed assets that don't cost a lot, there's a fun, I know it's accounting, we're saying fun, shortcut to help you with tax deductions. It's called the de minimis safe harbor election. When you meet certain requirements, it will help you simplify your bookkeeping and taxes. I'm Katie Boonschoten, president and founder of Certum Solutions, an elite QuickBooks solution provider and business technology firm, as well as Intuit's Trailblazer of the Year in our channel. Before we jump in, make sure to hit like down at the bottom if you like this video and subscribe at the top to see more videos like this from Certum. This isn't tax or legal advice, always remember, so consult with your appropriate advisors before doing anything big. Today we're talking about what you need to know to take advantage of the de minimis safe harbor election. We'll discuss fixed assets so you know what purchases are acceptable under this rule, capitalization so you know how this rule bypasses it, and the maximum amounts you can spend to stay within the de minimis safe harbor. So first up, we're going to talk about fixed assets. The de minimis safe harbor only applies to fixed assets, not intangibles and the rest of it, so you need to know how to identify them. Fixed assets are tangible and help generate business income for at least a year. They're also called long-term assets, non-current assets, or capital assets because they represent a longer fixed commitment. Property, plant, and equipment, which we lovingly call PP&E, is shorthand for the kinds of things that we often consider fixed assets. So for your fixed asset, or for your business, a fixed asset might be a computer, a piece of machinery, a vehicle, or a storage building that you've purchased. Now that you know what kind of purchases we're talking about, let's talk about how you're going to normally write them off. Once you own a fixed asset, it generally depreciates over time starting when you put it into use and purchase it. Generally accepted accounting principles tell us that you should recognize it once it's purchased, and then once it's put into use, that's when depreciation begins. Sometimes this is slightly different. Okay. The business then needs to include the fixed asset every year it's used while adjusting its value for depreciation. And we're not going into impairment and the rest of it during this video. That's outside the scope, but this will give you, a quick breakdown of basic depreciation. You're able to write off the depreciation cost in your taxes every year. This process itself is called capitalization and depreciation. Okay, and all of you guys are going, I've heard of this before. Skip to the good part. The de minimis safe harbor rule lets you skip this depreciation piece and the capitalization for amounts that in the IRS's eyes really are not material and they're considered trivial. Instead, you're allowed to recognize this expense in your books. You can take a deduction from that current year's taxes instead of over time, and you don't have to worry about tracking depreciation in the future. The upside is that we're simplifying our books. The downside is that we can't write off the depreciated cost in future years. And also, if you are on an accrual basis for your books, you're not truly matching the cost of the asset or the depreciation with the years that it's in use. So that's all stuff that you want to talk to your advisors about. Now, the idea is that obviously it's really not worth tracking. It's small enough it doesn't matter, so let's just get rid of it. Okay? How do you know if this election, this de minimis election, is applicable to your fixed asset purchase? Okay, first consideration is whether you have a receipt or invoice, which is known as an applicable financial statement. This affects what the cap on your safe harbor is. Without an applicable safe harbor, an applicable financial statement, you have a cap of $2,500 as of the recording of this video. With an AFS, you have a $5,000 cap. So if you have an AFS to prove the purchase price, you can spend up to $5,000. If you don't, you can spend up to $2,500. Once you have this documentation and your purchase price is below the safe harbor limits, you can treat this like an ordinary necessary business expense, and instead of going to your fixed assets or your PP&E, they'll go to your expenses. It's automatically deductible on your taxes. If you have questions about the de minimis rule and how it works, fixed assets and capitalization, reach out to us. We'd be happy to help. There's no pressure or commitment. We have to do our spiel. Our contact information, as well as an amazing blog post regarding this topic, is available in the description. I highly recommend partaking. And if you found this video helpful, please make sure, again, like and subscribe to our channel. Leave me a comment. And if I got anything wrong, because my mouth runs faster than my brain thinks, please don't hesitate to email me or leave a comment and let me know. Thank you again for watching. I hope you guys have a wonderful day, and I'll talk to you again soon. Bye-bye.